with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world is, and you simply can't go against that's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world is, and you simply can't go against that's what society needs. And I believe in my heart that a company like BP is actually one of the few
but that has faded. Down right now in the red, only by about 0.2%, but that kind of reflects a lot of the sentiment shifts that we've been seeing as the day moves on. Alphabet having an awful day, down 8%. A lot of this really has to do with ChatGPT. I mean, you, Carol. I mean, you remember we had a boss years ago. He used to always say, you can be first, but if you're not right, it doesn't matter. Exactly. And a lot of people starting to use that Bing ChatGPT mashup and saying, well, the results aren't necessarily as accurate as they would have liked it. So I used to use it, and then I think there's.
I would not want to be the head of Bard right now.
Yeah. Well, they can fix it.
Yeah,
also, but going back to the inflation story, too, because I thought there were two interesting earnings reports. One was out of Aramark and one was out of Chipotle, both, of course, food companies, kind of two different sectors, but in the food industry. But both of them basically made it clear they're still dealing with higher costs, and they expect those costs to persist. The big question is, how much of that are they going to continue to be able to pass on to the consumer? And an interesting commentary by the executives at both of those companies. They seem to express some confidence in that, but based on the downdraft we're seeing in the shares, down 3 to 4% here on the day, maybe investors aren't quite sold on that. And that goes to the chart we were just showing you just a second ago here. Used car prices, of course, tracked by Manheim. Everybody started paying attention to this at the start of the pandemic when used car prices just went through the roof. And they finally started to moderate last year. They were kind of a leading indicator that a lot of people were looking to. But 2 straight months now, they started to creep back up here.
There's that you, right?
And a lot of people are wondering, is this just sort of a one-off deal, just, you know, a couple months or maybe anomaly? Or does this mean maybe we're headed back for a resurgence?
That one has got me scratching my head at this point. And are consumers to some extent thinking we're coming to an end in terms of those Fed rate moves? Having said that, the Fed speakers continue, some voices more important than others. And the head of the New York Fed, John Williams.
They're all equal.
Sorry, I'm going to get all these phone calls. What do you mean I'm not important? Are you a voting member? Are you not? Federal Reserve Bank of New York President John Williams, he did make some comments today. He said forecast officials submitted in December still a good guide for where interest rates are headed this year. We're talking about the dot plot. As for the next move, come March, here's what he had to say.
But I think these 25 basis point steps allow us to both adjust policy based on the new information and what's going on, and get us to our goal as we need to. Obviously, if the situation changed, significantly, we would have the ability to move quicker than that or adjust course. But right now, I think the 25 basis point increase that we just put in place seems like the right size to adjust policy, at least given what I'm seeing today.
All right, that, of course, is John Williams, the president of the New York Fed. They're at a Wall Street Journal CFO
your
Network Summit.
Fed member,
what?
Right? Yeah, that's your favorite Fed member, number one, just so we know that Carol is ranking
No,
them.
Jay Powell is my favorite.
Oh, good answer.
Okay. All right. I don't believe that for one second. But in all seriousness, to his point, and I think this is interesting, too, because when you start to see what's being priced into the market, there's been a lot of talk here about this mega trade that was made yesterday on Tuesday afternoon in the SOFR market, basically betting on the idea that the terminal rate might end up being closer to 6% than to 5%. And we've started to see a lot of people sort of reassess, saying that this 5.1 that they got out there on the dot plot, I mean, a lot of people weren't buying it first, I guess, to the downside, right? They were saying they would never get to 5.1, and now people are saying that might be too low.
Yeah, Romaine, and if you look at the Fed fund futures, the implied rates going all the way out to the beginning of 2024, they have inched up a little bit. But what's interesting is in the regular bond market, the Treasury market, we are seeing yields down today pretty much across the board. So I think something that was on a lot of people's mind was when that traditional correlation, that negative correlation between Treasuries and stocks would return. Obviously it got blown up last year. We are seeing it return a little bit today. We've got, Treasuries up, stocks down. It's too much to make really much out of it, Scarlett, from one day. But something, I think, a theme that's worth watching as we go forward if this narrative starts to be more of a focus on growth rather than inflation.
Yeah, but for now, when it comes to inflation, there's all kinds of other unexpected things that I don't think everyone's necessarily priced in or factored in yet as well, including China's reopening. What will it look like? Will it follow the same pattern as the U.S. and Europe? And if it doesn't, how is that accounted for, and how might that show up? This is still something that we're kind of grappling with, given that a lot of people didn't really expect the U.S. reopening to play out the way it has.
Yeah, but we never really closed. Yeah, we closed for like a while, and then Florida just kept the lights on forever.
All I know is I'm data dependent, just like Jay Powell and company. Yep, I'm thinking about the Valentine's Day CPI report. What are you thinking about?
Did you see LeBron last night? That's what I've been thinking about.
I know.
I'm thinking about the Super Bowl on Sunday.
I'm going to date myself, but I'm actually old enough to remember when Kareem broke the record. I remember sitting there watching that, so it's kind of interesting to see how old I am now that I get to see the record broken again.
How old are you?
33.
Okay. All right, we'll be back. We're going to continue this conversation. We have a lot of earnings, including those from Walt Disney, after the closing bell. So we'll be back on radio, on TV, on Quick Take, also known as Bloomberg Originals, and on YouTube. We're counting you down to the close beyond the bell at 4 p.m. Wall Street time.
And we do continue our markets coverage right here on Bloomberg Television, counting you down to the closing bell. A little more than 50 minutes to go here on this Wednesday afternoon. Pleased to say Aaron Gibbs is joining us, CIO over at Main Street Asset Management. Aaron, let's start off here with market sentiment here. There does appear to be a shift, at least I guess incrementally here on that day-to-day basis that we obsess over. But overall, materially, do you think that the market has any real different expectation for 2023 than maybe what they had a couple of months ago?
Oh, I think they're starting to realize, much like we've been saying, that for a while the equity markets really didn't believe in what the Fed was going to do, and there was a disconnect between equity markets and the Fed, and also what fixed income markets were doing. And I think equity markets have been sort of coming back and realigning themselves with the rest of the world. But underneath, I think what's interesting is that we haven't seen a lot of fear or risk indicators go high. So we haven't seen CDS spreads get really high. We haven't seen the VIX. The VIX has stayed below 20, which is a nice calm area. So we haven't, even though they're, I guess maybe let's say coming to terms, it's not spiking fear. And so even though we've had a few days of wobbly performance, that's really been about the earnings story rather than genuine fear about inflation and recession.
Where is the fear showing up then, Erin, if not in things like credit spreads or the VIX?
So it really is just getting hit in very stock-specific areas, and we've seen greater and greater stock dispersion come up, particularly across different factors. And January was one of the highest years, and I think that's really shaping up even further as we see a really disappointing Q4 earnings season. Right now, the beat rate is only about 68%, which is one of the lowest beat rates that we haven't seen since the first quarter of the pandemic. Generally, the beat rate is more like 77, 80%. So that's quite significant. We're also seeing a really high miss rate of about 30% of all companies reporting. So I think it's really about companies that have managed expectations, that are still able to manage whether we're facing recessionary fears or inflationary fears. And we're really seeing a significant drop in just growth and profit estimates for 2003. They were already pretty low to begin with, and now they're down to about 1% for the year.
Yeah, it'll be interesting to see how it finishes out. And then, Erin, we're starting to get, of course, a lot of earnings out of the European companies. There was, of course, a big rally to start the year that actually pushed the FTSE actually close to a record high. And I think even the SOX 600 was making a play for a fresh cycle high as well here. What's in the water over there that you think is drawing a lot more investor attention relative to the United States?
Right. So relative to the United States, basically everything's looking better in Europe. So you're actually seeing revisions that are going up. We're now looking at sort of a contraction for the S&P in Europe. We're actually looking at about flat. And it really has a lot to do with just better than expected, obviously, winter and energy prices, but a lot about the reopening. And so anything to do with reopening, anything to do with tourism, that's been doing exceptionally well. And we're just seeing, it's not that necessarily Europe will end up having a higher growth than the U.S. at the end of the year. Right now, it's sort of a 50-50 split.
Right.
But it's just about the outlook, the perception, and the perception is just improving when it comes to Europe versus the U.S. where it's declining.
Right. The reopening of China, of course, meaning a lot more tourists visiting the cities of Europe. I wonder, growth you've noted in your written remarks to us has been working in markets outside the U.S., like Europe. But when we think about growth, they tend to be tech names, particularly in the U.S. What qualifies as growth in Europe?
So one that has to do with tourism is Ryanair. It's been really, one of the economy airlines, but again, can benefit from China reopening and just tourism in general. Another is LVMH, obviously luxury goods, but they are one of those companies that again is very focused with tourism, tourists coming in, buying, and they also all benefit from just the depreciating dollar versus the euro. And so that's just another tailwind when you're investing outside of the U.S. for this year that's been particularly profitable for the past 6 weeks.
Well, I am curious, Erin, I don't want to get too in the weeds specifically about retail and some of these luxury goods, but then when you looked at some of the earnings out of some of the U.S., I guess, quote-unquote, luxury makers like Capri Holdings and some of the others, they seem to be running into some issues with regards to their pricing power. And I'm wondering, are the LVMHs of the world sort of, I guess, maybe in a different class, if you will, for lack of a better phrase?
Yes, and I really want to make that I think that's a really great point, because if we're talking about luxury brands or just apparel in general, luxury brands are a completely different class and perform very differently than, let's say, your Nikes or Gap, that type of thing. And obviously LVMH has an extraordinary portfolio. It's not just handbags. Yeah. But again, it has a lot to do with China reopening, people spending money, and just an improved global outlook, and of course that euro-dollar conversion.
All right, great stuff, Aaron. Always wonderful to talk to you. Aaron Gibbs, CIO over at Main Street Asset Management. We continue to count you down to the closing bell. It's going to get a lot of great insight going forward. Nancy Tangler, CEO and CIO over at Laffer Tangler Investments, going to be stopping by the big program. Plus, we're going to talk about the meme stock army. It's a little bit smaller here, and of course, with all the stocks down and the crypto fervor sort of cooling here, but a little less focus on the stocks and a little bit more focus on what's been going on in the options market. You get a nice little read here, maybe on what we hear out of Robinhood and their earnings later tonight. Plus, the big star of the show after the bell, Disney, reporting its first quarterly results since Chapek left and Iger came back. Mountain CEO Mark Douglas is going to be joining us. Citigroup's Jason Bazinet going to be joining us. John Gerner over at Leisure Business Advisors also going to be stopping by to help break down the numbers. We have the fullest coverage that you're going to find anywhere. If you're not watching us for Disney earnings after the bell, you might as well not watch it all. This is Bloomberg. That was the big story.
From the big banks to big. How high the bar is set.
Bloomberg breaks the numbers first.
A blockbuster number.
Blowing through estimates.
These guys are minting money with exclusive expert analysis.
Does this approach make sense to you?
We're going to have to make an acquisition.
This quickly become just a really crappy business model.
I don't think their business is as broken as the world thinks.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
About 42 minutes left here in the trading day. Keep an eye on the wall behind me. These are the main market drivers for the S&P 500, CVS, United Health, Fortinet, and of course Tesla doing their best to keep this market afloat. And well, they're losing that battle right now. Meta down about 4% here on the day. Amazon down too. Alphabet having an awful day, down almost 8% here on the day. That's the setup right now here, pushing stocks towards the low of the day as we move closer, just about 40 minutes away from that closing bell. 1.94% here. The big moves we saw in the yield space over the last few days, tempering just a little bit here, but still elevated, 4.45 right now on your 2-year yield here. Not a whole lot going on with regards to the FX space here, some moderate dollar weakness here on the day, but this brings us back to those individual stories here. A lot of the earnings we got, Uber, good, Illumina, bad, Fortinet, fantastic, Lumen Technologies, not quite, software, New Relic, yes, that's doing good. You put it together here, do you create a thesis, do you create a narrative here that there is an impetus to move this market a little bit higher? Amid all this, of course, there has been a great deal of volatility. Abigail Doolittle joining us right now, as she does every day at this time, for our Options Insight segment. And Abigail, I know you've been looking at this roller coaster of volatility that we've been on for the past few weeks.
Yeah, it's unusual. We were so used to it last year, but this year it's been all about the move to the upside. But this week we really have seen it all, especially yesterday, up 1.2%, then down 1.5%, and then up nearly 2% on the day. Net closing with a gain, but right now we're on the cusp of giving that gain up as stocks go back down. All of this is investors consider what Jay Powell said or did not say yesterday.
Hey everybody, welcome back to the second half session of the live day trade room. So to sum things up in the markets right now, we have about 40 minutes left to the close, but the markets have been executing a sell program all day long. So you want to be very careful about getting in on the long side. The only thing that favors the bulls in potential little bounces is the fact that the volume is light. But the sell pressure in the SPY has clearly been algorithmic. Every little small uptick has been slowly reversed each day. That's why you've seen a lot of intraday reversal candles. And here's your bearish consolidation, which you've now broke, and you're looking to confirm below this pivot. So right now there's still support, volume is light, but every little tick has been sold into. If you look at the DXY has trying to break out and close above this pivot. You're running into some near-term resistance, but the Dixie has been acting very strong today, even in the face of yields. Still technically down in the session, but yields are trading off of their lows as well. But overall, these markets have been very, very weak. There's an important signal that all of the swing trading and investors and market participants should tune in for in terms of our daily analysis video. I'm going to touch base on something that is extremely important, very, very important, because it affects the whole market. And let's just go through a couple of the usual suspects here. Google getting demolished. It is making a series of higher lows, but very, very weak with this market. Down 7.82%. You do not see Google down that often. And Google currently is putting inside bar bearish consolidation. So again, you're technically now retraced to support. And this is a big level for Google that it needs to hold. If it fails here, you can see this market trend much, much lower. There are a couple bright spots in the market. Obviously, if we look at Tesla, even in the face of a down market, Tesla's still been acting very, very strong. So that's probably due to the fact that Elon is announcing his next update investor meeting, which there's obviously always hype in. In terms of resistance, you can see Tesla's been breaking out of this range and now consolidating on the upper end. So that's short-term positive for Tesla in a weak market. You did hit your double top resistance over here. So this, as long as you trade inside this range, it's still technically bullish, considering the markets even are weak and Tesla's still consolidating at the highs. It still remains bullish at this point in time. But again, if the markets start fading harder into the late session here, we could see a flush based off of the sell side pressure that I've been seeing in terms of algorithms executing their sell orders. I think we could be susceptible to a late flush. Most market participants are used to power hour, where the markets rip up, and there's reasons as to why power hour happens. I won't get into them on this channel, but there's important reasons that market participants should know, which I can inform you in my daily analysis video on our Trading Capital Inc. channel later this evening. So the markets are really just trending here, catching a little bit of a bid here. They did make a new intraday low, so we'll see where the markets trend to. Obviously, you can see that there is a downsloping trend line over here that's been keeping the markets in check. So we'll see if that remains in the last 40 minutes here. Let's take a look at oil and just run through a couple of the usual suspects intraday. So if we look on the daily chart of oil, oil is trying to break above resistance and this pivot. That's short-term bullish for oil. And honestly, which makes me think that if oil is going to have a potential breakout here, and now let me be clear, the breakout might not be that robust. You still have tons and tons of resistance to get through. This is just a micro term analysis where you get above this trend line, and it could be a failed breakdown because you did confirm the breakdown of this trend line. And if you recapture it, it could mean this failed bearish pattern could turn bullish and push us back up to about the $90 level. Now, we'll just have to take it day by day. Either way, you have to remain neutral at this point in time because you are above resistance and you're potentially confirming above it. Natural gas got demolished today in the session. Let's take a look at nat gas. Oh my goodness, nat gas had a massive bearish engulfing candle on the daily, engulfing almost 2 days of upside on natural gas. This is why they call it the Widowmaker. I warned you in my natural gas, the Widowmaker video a few days ago that we were likely going to see a very, very choppy session with natural gas. I said this technical level, although it's so oversold and into a massive support level, it's not going to be easy for natural gas to fight this downtrend. And it's because there's so many shorts hammering this price back down, hammering this price back down. And ultimately, this is just showing me that there is weakening demand occurring in the energy sector. But overall, choppy session in natural gas, wild price action. The short-term positive, obviously the market session isn't closed, is that you have not taken out the low. If you take out the low here, then you're probably heading to 224 on nat gas. But as long as you hold this low, that's still technically support, and you have to respect this major technical level. But again, this is the importance of those levered ETFs. They can make you a ton of money, but they could also lose you a ton of money. Let's take a look at gold. Gold on the daily chart, putting in a beautiful bear flag consolidation. You need a couple more days and this would be a beautiful technical potential breakdown. Let's take a look at silver. Silver is also running through a little bit of a bearish consolidation. Notice how you wick up in the morning, and then you sell off. So that's definitely weakness in the precious metals market. Let's take a look at Apple real quick. Apple's basically putting in some inside bar. This is still technically bullish consolidation on Apple. You have not broken down. You haven't gotten a topping signal on Apple. Yes, it is extended. Yes, it's into resistance. And I do anticipate more of a pullback. But right now, this is still, as long as you're consolidating inside of this wide range green bar, Apple could still potentially move higher, which obviously would be positive for the whole market. Now, there's obviously other aspects of tech which we'll touch base on in our daily analysis video, so I'm going to encourage you to stay tuned for that video. Let's take a look at Google. So why is Google down in the session so much? Well, Google gapped down and fell because of the AI movement. Google's AI ended up being asked a question and answered wrong. So it's just showing you how early and premature AI still is, and there's going to be a lot of kinks and bugs. And if one of the largest companies in the world like Google, who probably have some of the most sophisticated algorithms and intelligence and data that they can rely on to create this artificial intelligence, it just shows you that they can even get it wrong. And this is why the technology, I think, has been hyped up faster than what the market has actually priced in for this technology. I mean, you've seen likes of Baba today announce a AI protocol, or a similar version of their chat GPT, and look what happened to Baba. It's basically down on the session. It was up and then it's down. You look at Baidu, they announced their chat GPT. It gaps up. We actually shorted at 163 in the pre-market. You can't even see it on the intraday regular trading frame, but it went all the way up to 163 and we shorted it, and it's fallen. So the common theme with this AI is that as soon as companies announce it, it falls. Let's actually look at AI. AI's pulled off the high, and then obviously the big one is Microsoft. Microsoft announces AI. They have their meeting, and we called this in our early morning stream on the gap up. We played this one in the live day trade room. We're also swing short Microsoft, which we're now in the money significantly. So Microsoft is paying us well, and what did they announce as well? Their little special investor meeting and talking about their potential AI algorithm with their Bing search engine, and the market fades it. So clearly the play on AI is to fade it. And I do think that's what we're going to continue to see moving forward. But a lot of companies have hopped on that hype train, and it's certainly paid forward to basically buy the rumor, sell the news. It's the old rhetoric and lingo, and it seems so straightforward and easy to understand, but hindsight is always 20/20. The market is forward looking. You also have to be forward looking. We were forward looking today when we shorted Microsoft. We gave you the playbook, and look at that reversal. So awesome job in just seeing through a lot of the hype and propaganda. Take a look at the spiders. They are selling off. Why? Because the Dixie had a pop. Boom, boom, boom. Who's a dollar bull? We are right now. Are you a dollar bull? If you had our service, you could definitely be dollar bulls with us. You would have got the alert. We're in the money on our dollar position as well. So definitely with the surging dollar, if this goes much higher, and we will discuss the dollar on the daily chart in our analysis as well, where we can touch base on the next resistance points, where the dollar is likely to go. Based off of gold's movements, gold is signaling a higher dollar since it is consolidating bearishly in this beautiful range over here. I mean, you can't get a better range, and the fact that it's under this 4-hour 200 moving average is just clear textbook potential setup occurring in the gold space. So let's just watch the spiders right now. There may be a potential day trade on the spiders. It's super risky because the time and clock is against us. But if the spiders were to significantly flush down into this 407.61, we could potentially play a day trade bounce long. Now the Dixie is continuing to push up, so let's be mindful of that. The Dixie's remaining near the highs, attacking the next resistance. If you get above this resistance and close above there, that's super bullish for the dollar, because it would mean that you're basically recapturing some of the lost momentum off of this high reversal. You tried breaking out here, failed, and now it looks to be that you're trying to attack this high pivot here. This was your Powell reversal and fall. If the dollar gets back above there, these markets could see a harder sell-off in the late session. So we'll keep our eye on that. A couple of the other big moving stocks today on the radar. Basically, we can see Uber's still up, but take a look at this Uber chart. I mean, it's bounced significantly off the low. That's an impressive reversal on Uber, but at one point in time, Uber went all the way down here at 34, and look at this epic bounce. So that's a really good bounce on Uber. Go figure, in a down market, Carvana is still up on the session, you know, so even outperforming Google. You're seeing Nvidia has almost gone negative. So Nvidia has almost gone negative. Let's take a look at the SMH, AMD, Taiwan Semi, TSM is the ticker. So potential distribution occurring. In terms of earnings tonight, we do have a couple earnings play. Disney, in my opinion, I think Disney's the 2.0. I don't have any trades on Disney, so just keep that in mind. I have no bias here in terms of upside downside. But if I were to play Disney, I think Disney's actually going to pop into the 120 level. That's kind of the level that I have calculated for the Disney chart to basically reach a full extension. But if Disney were to pop into these two pivots, 120, 126, I would play that for a day trade short. Basically, I do think you're coming up into some near-term resistance on Disney, but I do think that it could potentially pop in just to wipe out some short trades, really get people to cover and exit their positions. But we'll have to really stay tuned and pay attention to Disney after the hours, because it is a pretty big market cap. There's also, let me just see what else there is after the bell. I know there are a few others. There's actually a cool chart on Disney that I want to show you that I think it would be a good level to short. So basically, this beautiful symmetrical channel connecting this pivot to this pivot. And that's where you get that 120 level, give or take. That would mean you have a beautiful, fully measured move to the upside in an extension into this gap fill. That would be an epic level on Disney. If I pull up my weekly chart on my other screen, there actually is a technical weekly gap. Whoops, sorry. Look at that technical weekly gap right at this 120 level. So that's also what I'm seeing. That technical gap looks primed and ready to be filled. But Disney's really the big one after the hours. You do have the likes of Vimeo also reporting. Let me see what else we have. CVS. Oh, CVS was one that I wanted to pick up on the long side. I've been waiting, and I know that CVS just missed my level. My level was about $84, Pierce of 84, and it just missed that, but that would have been a sublime level on CVS. But in terms of other companies, I know there's Vimeo. Let's just scroll through here. Not too many big names. Dominion Energy was this morning. Fox Corporation, Tenet Healthcare, Equifax is another one. Sun Life Financial, SLF, Robin Hood, so Hood, H-O-O-D, kind of one of those more speculative, beaten down stocks that have fallen from grace. In terms of Robin Hood, so let's just see what resistance we're trading at. So if we just put a simple trend line, basically from this high pivot all the way down, you can see you've hit that resistance already. And now you are technically still consolidating. It's a little premature to tell if this is bearish. It's starting to look like a little bit of bearish, but the overall trend in the near term is still bullish. Obviously the major trend is still down. But in terms of this level, I see a gap that around 12 that still needs to be filled. And then really that sums it up about that. I mean, but if you were to get a pop into this level, 1284 or 1627, that would be a decent short level. But you never know what's going to happen. Here you had earnings, it was positive earnings. The stock actually gapped up, and then 2 days later you had your sell signal, and then look what happened, big collapse. Previous earnings over here, market actually rallied on a weak report, had an extension rally. Over here, markets also sold off and rallied. So right now the volume in call options have jumped to a record level. We'll just tune you into Bloomberg.
As it relates to retail traders, absolutely.
Yes,
When you look at it, it's an easy way to get exposure and actually get returns, as opposed to buying a dip and holding and hoping that
highly
Tesla
leveraged
gets better.
And they don't have to put out as much money either, right? Options are much cheaper than buying the underlying stock.
Exactly, and that's what we've been tracking really when you look back at 2020 and 2021, is that it was an easy way to get exposure and not necessarily know what you're doing.
Yeah, and get that exposure, and it's an easy way. Of course, it's also an easy way to take on a great deal of risk. And I guess maybe that brings us back to the fundamentals here, Jess. At some point, you can make money off those trades on a short-term basis, but if you are more of a long-term investor, or you plan to hold this, even if it's just a few quarters, the fundamentals eventually have to catch up, right?
Right. And when you're looking at the beat rates right now from fourth quarter earnings season, on average, the day of earnings, basically S&P 500 are outperforming the broader benchmark by 1.5%. So that's actually beating a 6-year average when you're looking at these reports. So leaving some people scratching their head. But again, it is looking forward. And also the big margin question as far as when could potentially we see a trough in that, because that will bode well for margins and thus obviously the trajectory of the equity market. Right now, the consensus is we could potentially see a bottom in that for the fourth quarter, but it has continued to get pushed out. So that's going to be the big question, especially ahead of next week. We'll have CPI. We also have PPI coming out, and that's a big thing with the spread between the two, because it's turned positive for the first time in 2 years, the last time we got the batch of data.
So we talk about the split between fundamentals and just the trading and the technicals. I think that's encapsulated by Bed Bath & Beyond, whose stock has gone all over the place this week,
That's
right?
still trading?
It is, right? It almost got to $6 earlier this week. It's now at $2.61. We were talking about how it's trying to raise money by selling shares. Romain gave us the headline, and it was a little bit of a head scratcher there. Who's buying shares of Bed Bath & Beyond as the company tries to raise money?
Well, when you look at the deal that was announced, it, according to Bloomberg reports, has been anchored by Hudson Bay Capital. So a number of institutions are getting in on the preferred deal. But the main caveat with that is that they're able to sell their stock if they want to at a discount, or they're able to buy at a discount to really lock in immediate gains. And that's something that we've seen play out with meme stocks in the past. AMC comes to mind. But when you look at Bed Bath & Beyond, it's almost like a deal with the devil. You're able to raise cash to keep the balloon off the ground, but you're not really changing the fundamental
The balloon
picture.
can't lift.
Exactly.
But that's, I mean, I don't understand. Because, so, I mean, when I first saw it, the first thing that comes to mind is Hertz, right? The idea that investors sort of took a chance on that, and the equity investors, and they actually did get paid. But then, of course, there are a lot of other non-Hertzes out there, and I wonder if Bed Bath & Beyond falls into that.
Right. Well, Bloomberg Intelligence actually has a meme factor that they track. Chris Kane over at Bloomberg Intelligence.
really?
And so it actually outperformed its counterparts last month by 16%. But he doesn't think that's something that is really sustainable, but not surprising.
Everybody, welcome back. Just had to get some water here. So right now the spiders are catching a little bit of a bid, but notice how the sell volume is so much heavier than the buy volume. This buy volume pressure has been minuscule and weak, and every little bit of time the buying pressure comes in, it's met with heavier sells. So What that's telling us is there is likely funds having their algorithms execute a sell order until you start seeing the volume bars increase to the upside in favor of the bulls. You likely see continued downside. And now here's the thing. So that was your pivot low in the morning, early morning. And basically you now just closed below that, but you haven't confirmed, but you're on the brink of breaking and losing this key support. If we don't get through this next big resistance here and confirm above, you likely will test the low range again and probably break it. But right now the dollar is coming in, so you're seeing the markets take advantage of that in the short term. Notice how the dollar did close and get above this previous pivot. Now you want to see the dollar hold this level in the short term and build a base in this range to explode and move higher. And then you can see it move up. So what I'm expecting is the dollar to consolidate a little bit and then break up and then build a new base off of this little level and then continue stair-stepping up. So that's kind of a little bit of a teachable moment there in terms of what we're looking in the short term for the markets. So Nvidia is slightly back to the positive side. Everything is catching a little bit of a bid here with the markets. We are in the money on our Skyworks here, but I'm going to hold this one lower. There's a key trend that we broke. This was our first trend break. This was our second trend break, and we've actually did a beautiful technical retrace. Boom, got rejected. And I do think that the downside we can see on this is probably back to this 116.30 area. I think we could see that probably fairly shortly within the next week, I would say, maybe even tomorrow if we got a hard flush. Speaking about tomorrow, we have the payrolls number coming out, so that's labor market data that could potentially spike yields even more. So if that number comes in hotter than expected, and let me just take a look to see what the market participants are expecting. So tomorrow at 8:30 is the payrolls data, the initial job loss claims. So initial job loss claims consensus is 190,000. Remember, we just got that 500,000 payrolls report, so potentially the labor market could be stronger than what the market is anticipating because we got such a large surprise to the upside. I don't think this number has been revised. So again, we have to keep in mind that the yield market is still very, very sensitive to the overall jobs numbers that we get because it really dictates whether or not the Fed is going to be more aggressive or more dovish. So 8:30 a.m. consensus is 190,000. You also have natural gas storage tomorrow at 10:30, which would obviously be important for nat gas. Potentially the markets are pricing in, and with the natural gas inventories tomorrow and storage update, potentially the sell-off today was maybe the near-term capitulation. I just want to do a quick volume check. I mean, look at this anemic volume. Basically, this is saying that no institutions are playing right now. Extremely, extremely light volume. But light volume actually favors upside float. So as long as this volume stays light, it likely means that the institutions are done selling, at least for now. Maybe they're just waiting on that report tomorrow, but the light volume favors upside. And just look at the difference in this light volume. I mean, it's incredible to see it drop off a cliff. If you look at UNG volume has picked up a little bit over here. So there's obviously a lot of people trading and moving in and out of this ETF. But the sell side volume is starting to decrease. Here you have a higher low, higher low, higher low, even though you're still technically made the low over here in the trend for now. So that's pretty much the data tomorrow. There are a bunch of other earnings that we'll have to be aware of in the market. And the spiders are just trying to push up right now. You're seeing the dollar trying to still consolidate to move higher. This is the big level for the dollar to see if it can push through and build a base to continue higher. We're also seeing weakness in ITB, so the home builders are significantly under pressure. Take a look at Lyft. Lyft has seen a massive reversal. So this is the interesting thing about Lyft and Uber. So take Lyft into account. Gap up on the sympathy of Uber, huge reversal. Look at Uber. Massive reversal, got bought back up. So the difference is Uber got bought back up, Lyft didn't. So I think we're going to see actually Uber come in again, just based off of the price action of Lyft. Unless Lyft's earnings are significantly different, which they actually report tomorrow, so that'll be an interesting potential play. But certainly what could transpire, and it's really interesting because everyone's expecting now a bad reaction in Lyft. As you can see, the Lyft price action is getting crushed, and Uber's actually rallying up. It would be insane if Lyft actually started blowing all of these shorts out of the water and people out here. But this is a nasty daily engulfing candle. You can see you're almost wiping out 4 days of trading here. So that's an extremely bearish sign for Lyft. Certainly is. A couple other movers on the session. Apple's down 1.6. Meta's actually taking a bit of a sell side day to day. So you can see here Meta's down 3.86%. I just want to do a healthcare check. You're seeing some weakness in Vertex, VRTX. So we're now in the money on that short. That's a beautiful, beautiful sell. Notice how you came right into this double top. We executed an additional short and you've pulled off. The importance of Vertex here is what I want to bring to your attention is this is the trend we're watching. You break this trend and healthcare Vertex is certainly in trouble. It's a decent sized market cap. Now, one of the reasons why I think we're going to break this trend is because you came down into support. You hit the 200, you hit the trend line, you've weakened that trend line, you bounced, you could not make a higher high and hold that higher high, and now you're coming back into that level. So you may get a little bit of a potential bounce off this level because it is support, but don't expect the bounce to be as robust as this move over here. We can probably actually expect this to bounce and start building a bear flag on this upwards pressure before rolling over. So you may get some price action where it bounces off of this level, you get a little bit of a bounce, a little bit of backing and filling, and then eventually a bear flag and break lower. Let's also see if there's anything else in the healthcare sector that I can touch base on. Really, there's nothing to touch base on. Let's run through some of the sectors like XLE. XLE's had a nice bounce off the lows. XLK is obviously seeing some distribution. This is interesting because XLA actually made a high today on the ETF right into this red bar range, and you've reversed now. We'll just have to keep an eye on that. XLV, so healthcare. Healthcare is still just doing this grind lower and lower and lower. Let's take a look at XLP. Consumer staples is also showing exceptional weakness. Notice how this was your little bit of a bearish consolidation that we can do it from this pivot over here. Notice how you broke it, rallied back up, got rejected, gap down today. So you still haven't confirmed, which is why we have to be careful about this particular sector. Let's take a look at XLB. XLB seeing some downside pressure. Still really couldn't get above and confirm of this resistance level. Let's take a look at XLU. XLU's actually one of the weakest sectors that I'm seeing hanging on from a cliff. So basically the big level on XLU is over here. You notice how you could not technically get above this level on a weekly basis and confirm above it. And now you're starting to break lower and lose key pivots. You have triggered a little bit of a mini topping formation here that looks exceptionally vulnerable to more downside. Really, that's going to be it for the sectors. We'll just flip back to the Apple chart. Sorry, I got a phone call there. So Apple's actually looking very, very weak. This is all bearish consolidation. Notice how you're stuck in a range. You hit the high here, you hit it here, you hit it here, you hit it here, and now you're pulling back in a little bit. Take a look at the SPY, starting to come in a little bit more now. If you lose this green bar, you're basically going to test the lows here. Natural gas has caught a little bit of a bounce. Another one that's weak is interesting is Regeneron. So when you start noticing that a lot of these stocks are weak, you know, Regeneron down 2.5% is pretty big sell in Regeneron. This is another one we're shorting at 761 is our average. So I'll just put this one up here. Basically, we are in the money now on Regeneron at 761.67. So right around there, just a little bit higher actually. And we're now looking to potentially have a failed breakout. So this was your breakout, sucked in new investors, had an epic reversal, topping tail, and now you're reversing pretty hard. You will have a lot of support in this range, but considering you've had a failed breakout, this likely will go back to the 200 daily moving average, which would imply a gain for us in and around about 10%. So lots of market weakness creeping in as of late. There's key stocks breaking down that I'm observing. You still have strength in energy, which is obviously holding up like Exxon, but certain key key stocks are starting to show a lot of weakness, and we certainly have to take note of that. Another interesting one of my favorite shorts actually that I've issued with my members is VMware, VMW. We are in the money on that short trade, and basically what I'm looking at here is this daily chart breakdown here. So you had your initial trend, and this is what's beautiful about technicals. You had your initial trend, which was powerful, 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 powerful. You started seeing distribution signals, this broadening formation, distribution, and now the moving averages are rolling over. The trend is rolling over. This was basically the key line in the sand that alerted me to a nice sell trigger, and then you've broken and cracked that level. Another additional level that I was watching was basically these key pivots over here. Notice how you pierced them here, you pierced them here, but rallied above, and now you're actually gapped over it, came back up to the retrace, and you're still falling and looking to confirm below. If you break down below here, this pattern likely sends you back down to 110. You'll have some initial support here at 116, but around 110 would be your larger area of support. Let's just flip back to the S&P because we are still seeing more of a downside shift rolling in. And look at that. So again, I'm still in the camp that the last 10 minutes we have to be aware that we could see a little bit of a flush. Certain key stocks are making moves down, which could leave this market vulnerable. I would not be disappointed or upset if you took your profits on SWK with us on our day trade. It is a full position, so even 55 cents is a massive, massive win. In terms of my position in SWKS, I have about 700 shares on SWKS, but it's getting a nice little pop here. Let's look back at the spiders. The spiders are getting a little pop. Look at that light volume though. But the spiders are floating on light volume. A lot of algorithms, game playing, futures markets whip this back and forth to try to chop people out of their positions, in and out, in and out. But it's so crucial to wait for specific setups in the markets. But this is the big level I'm also watching on the SPY. This is your trend break. I'll actually put it in yellow. And you've broken, and you did confirm. Often you get a retrace back to that level. We'll see if we do. If we get the retrace, it'll suck in new traders, acting like we've had a potential breakout above this resistance trend line. You have had 1, 2, 3, 4 pivots hits at that trend line, so it is weak. So perhaps you need to go to the next resistance points, which is right around here, and this would suck in more people on the long side. If you get through this yellow trend line, you have resistance at these 412 levels. But again, what I've been seeing all day is that the bounces are very minuscule, designed to rope in, suck in new money, as if we're getting a potential bounce. But the trend is down all day, and I've been seeing the sell side pressure. I mean, you can see it in the volume trends, just comparing how large the green candles are and how large the red candles. For instance, okay, let's do a little bit of teaching here. This green candle here and this green candle here is massive, in terms of size. But look out how weak the volume is, just abnormally weak. And then even when you look at this green candle here, a big one in comparison to all this little chop here. But even though it was the largest wide range green bar candle, it was the lowest volume trend in and amongst these little candles here. So that's why it's important to pay attention to volume, because it will often dictate whether or not institutions are buying this or they're just whipping it around to chop people out of options and whatnot. But you are seeing the dollar soften slightly with the 2-year yield, so potentially we're going to slice through this and test next resistance. That's probably what's going to happen in the near term. But again, nothing really terrible. I mean, the indices are down. S&P's down 1%, the Nasdaq's down 1.66. Gold is slightly eking out a gain. Spiders are still seeing resistance though. If we can't get through this level, that's a pretty bad sign for the SPY. Take a look at this Kellogg's sell. Kellogg's has been under pressure all day, actually seeing some increased sell side pressure along with the SPY. I'm just going to look at some other trades here like Merck, MRK. So another stock that's putting in a nice little bear flag is Merck. Merck was a leading indicator. And look at this beautiful topping formation. I'm glad I just switched to it, because if you crack this neckline on Merck, this is a little mini topping formation. That's your neckline. You crack that on Merck, and let me just do a quick 107.50 to about 106.50. So that's about $1.10. So that would take us down to 105.30. So that would take this topping formation, if it triggers, takes you down to about 105.30, which you can see is right along with this pivot breakout and your support moving average. But that's a mini topping formation. But putting that little intraday pattern aside, let's look at the larger time frame. I'm happy to continue to teach and show you pattern analysis where I can. I do think it's very interesting. I am always constantly learning. But this is the Merck pattern. If you look on the weekly chart, Merck has this beautiful 4 weekly bar surge. You're getting a bounce now, but Merck is primed to, it's really not trading at any support. I still have in the near term that Merck has to probably get down to this $87 level before it can continue to try to march higher. This is a quality company. Even in amongst the hardest sell-offs, you're still keeping this weekly 200 MA. So that's a massive, massive support level. You can see it's been bought up numerous times, and if you've bought that level, it's worked miraculously. So again, this is one of my favorite stocks that I'm keeping on the long radar. It did get a little bit too extended, but Merck is one of the stocks I am looking to accumulate a fairly decent sized long position when it hits my technical levels. I have a great stock list of stocks that have been outperforming, underperforming, that by the time that this bear market hits the bottom, we will have a whole insider investor list that I do think most market participants would want to be aware of, and we'll be certainly releasing that to our members. So it's very encouraging to continue to follow our channel, because we're going to continue to give market insights into this overall market. And over this last 18, or I guess the bear market's really only started January of last year. That's when I kind of like to think it did. But some people call November when the NASDAQ topped, January. But in terms of the market, how it's worked, over the last 12 months, we've really started accumulating individual stock notes, stock performance, what trades have been working, what trades haven't been working, the stocks to avoid because we've been obliterated on the shorts, the stocks to avoid because we've been obliterated on the stocks. There's a lot of things that have worked, and there's a lot of things that haven't worked. So we have been compiling our database here at TC to basically make a list of those outperforming stocks that we will buy at the bottom of this bear market. Because let me tell you, you can make a hell of a lot of money in bear markets by being on the right side of the trade. But when that bear market bottoms and you find those quality companies on the cheap, it is just truly, truly life-changing. And that's why I'm so excited being a young investor in this market, because I'm finally getting an opportunity to buy the favorite quality companies at massive, massive valuation discounts, and actually resetting it back to the baseline as to where our monetary and economic supply should be. So back to the charts, enough of my rambling. S&P still trickling lower, looking very, very weak. Why is the S&P trickling lower? Look at the dollar. It pierced through that level. Still trying to build a base off of this level here though. Let's flip back to the SPY. Coming on down. Let's just tune into Bloomberg for a quick second.
Got to pass, I think, today.
Yeah.
So I think this is an interesting opportunity for investors.
All right, Nancy. Great to see you in the flesh. Live here in studio, Nancy Tengler, CEO and CIO of Laffer Tengler Investments here. About 3 minutes ago until the closing bell, some breaking news that just crossed the wire a little while ago. This involving the crypto industry and Kraken, one of the world's largest cryptocurrency exchanges. We're now learning, according to Bloomberg sources, that it is under investigation now by the top U.S. financial regulator over whether it broke security rules related to certain offerings to its U.S. clients. This is an SEC investigation, according to people familiar with the situation that Bloomberg reporters have spoken to. We'll dig a little bit deeper into that, but you want to sit right here, because full coverage coming up in just a second of those Disney earnings after the bell here on a day, Scarlett, where we see the broader market taking a little bit of a pause.
Yeah, and the big question when it comes to Disney is, as Nancy put it, what it does with the costs, especially when it comes to streaming, because it really has to address that under its new old CEO, Bob Iger, and also what it means in terms of...
So we're back here. The SPY is catching a little bit of a bid in the last few minutes here. We are basically going to be covering Disney in the after hours here. So we will cover Disney. Wide range on Disney is about a 5% range, up or down. But we will be covering Disney after the market close, just to see if we get a pop or drop. I have buy levels, I have short levels. So just depending where we do finish, we may have a potential trade there. In terms of the levels that I'm looking for on Disney, let me just pull up my other chart here and do a little bit of work as we watch. I'll actually pull up the Disney chart now. Let's flip to the, and we want our after hours prints on, because Disney could move right away. But in terms of Disney, 120 Pierce or higher for a short. In terms of a scalp long, basically at this 95.60 level. Let me just double check that. I just want to check on my other screen here just to make sure that that is the right level in Disney. Let me double check this. So the markets are closed. They are down on the session today. Basically for Disney, yeah, I like the 95 level Pierce. So we'll see what type of action we get here on Disney. 95.30 on Disney would be a great level. Let's see if there's any other potential earnings plays. I know we have Vimeo, but Disney's the real big one. Doximity is also reporting. So that could be fairly interesting. But let's see. I think my expectations is for Disney to pop up to this 120 level. That's where the pattern is technically fulfilled. A lot of shorts have piled in here already. You have seen distribution, but if I were to pick a side, I would probably be saying Disney pops up and then short it. But I'm not jumping ahead of that until we have a reaction here in Disney. But 120 or higher is the short level on Disney. Just scrolling through to see if there's any other reports we should be aware of. Doximity is one, DOCS is the ticker. No other real market leaders here. CME had a really good pop. Vimeo. Spiders are catching a little bit of a bid here. Spiders are catching a bid. I'll actually take these out now.
Points off of the S&P 500 alone. It's obviously all because this demonstration of their new Bard AI system didn't go so well. It really gets you thinking about all these plans by tech companies in AI and how they're going to roll them out.
Corporation is basically not doing anything right now. Oh, that reported already, my apologies. Molina Healthcare is another one. Molina, MOH is the ticker. I'll be watching that one. I actually think Molina gets a pop, but you never know. Anything is possible with these stocks. If Molina Healthcare were to get a pop into the 332 level, 332, 332.94. So let me just show you this ticker. Basically, if we were to pop into that level, it would be a good short level on Molina. You do have a down sloping trend line there. But that would be my potential start accumulating a swing short. Let's flip back to Disney. Spiders are bouncing around in the after hours there. We also have Goodyear Tire reporting, which is basically, let me just see, really flat right now. Wynn Resorts is another one, so we'll see if that has any sympathy plays. Wynn Resorts, WYNN is the ticker. Sonos is another one. Spiders are really just flat now. Sun Life Financial, SLF is the ticker. Still no movement on that particular stock. We're waiting on Disney. We are waiting on Disney. And the spiders are really up 4 cents in the after hours, so nothing too crazy yet. You also have Viking Therapeutics, VKTX. That's an interesting one. Wonder what they would report. I have been short that. I would love to short that one. I am getting sell side signals on VKTX. Distribution is occurring. But again, that one could pop some more. Spiders are now net negative after the hours, just slightly down. Oh yeah, Hood is the other one, Robin Hood. Not really seeing any other movement. XPO is another interesting one. PI, Equifax. We also have Affirm. Oh, Affirm could be a mover. Affirm, I think, is actually Nope, not out yet. So let me just put my screen into 4 little windows here so I can see it. I'm going to keep track of Affirm. I'm going to keep track of Goodyear Tire and Molina Health. And if there's any trade setups, I will let you know. You will hear it first. Disney's popping and now dropping. Disney's dropping. Disney's dropping. First move is often the wrong one. We saw Meta do this, so we need to see some continuation. But down about 3.29 from the highs. I still think, you see what I'm saying? Let's see. You see what I'm saying? They frickin' do the same playbook. If this pushes through, the first move is the wrong one. It's lifting these markets. 120 is the level. Let's go. Let's do it. Let's pop it into our level. Because I will short Disney if it pops into our level. And this is going to be a swing trade. A swing trade short. I'm going to hold this overnight. I'm going to hold this overnight. Unless it had an epic pullback where I couldn't resist taking my profits. But let's just see. I'm watching Affirm as well. Affirm hasn't really done... Affirm is down as well. Affirm is dropping. Buy now, pay later. See you later. Affirm is down about... What are we down here? Almost 12% in the after hours. 10%. It's catching a micro bounce. It's down 8. Disney's starting to pop back up. But I like Disney at 120 Pierce. A 120 Pierce. Or even 122 if you're a little more conservative. But Disney's pushing up here. Disney is pushing up. You're seeing Affirm getting wrecked. Affirm is down 12%. Goodyear Tire's actually falling. Let's check on Vimeo. And then we'll watch Sun Life Financial as well. SLF. SLF. So really no movement on SLF. But Affirm is getting wrecked. I'll put up Affirm on the screen in a second here. Just so we can compare the move. Look at this wrecking. Demolishing people. Demolishing people. That's okay. Disney's starting to come back in. Spiders are still slightly positive. Let me see if there's any other stocks that we need to be watching. I don't think there... Oh yeah, Hood. Thank you. There's Robin Hood as well. Just going to pull that up on my other screen to make sure we're not missing anything crazy. Let's pull up Hood. Hood missed on earnings. Hood is falling on earnings. Taking us downtown. Down to the Hood. Disney's pulling off the highs. So right now, spiders are flat in the after hours. So it's showing that the earnings are currently basically flat. Now they're negative. So let's flip back to Disney. Disney's probably, look at this, Disney's actually going to lose everything. This is not a good sign for Disney. Markets have now gone negative in the after hours. Just slightly negative. Nothing crazy. I want to see if we can identify any other sympathy plays. So you have, obviously you have a firm getting killed. So UPST, which is that buy now, pay later bullshit as well, probably is also going to get wrecked. So you started at the day at 1896, and you can see that it's trading down in the after hours by about 2%. So that's a little bit of a sympathy trade there. Obviously, if a firm is down 11.5%, 12% in the after hours, actually 13%, you're probably going to see more downside. Disney's still trading, seeing a lot of distribution occurring. There's a decent amount of distribution occurring in Disney. Let's take a look at Disney again. Disney's acting very, very weak. Very weak. Just thinking if there's anything else we need to be aware of. Other trades. Let me check to make sure. The after hours NASDAQ. So far, Disney's seeing distribution. No trade yet. Toyota is another good one. SCCO. What's that?
They own everything, but now there's an opportunity perhaps to monetize that once again.
Yeah, and also the big question is, well, what does Nelson Peltz think about these earnings? Obviously, Disney dealing with that activist investor agitating for a seat on the board and some changes. Perhaps, Romaine, this takes a little bit of the heat off of him.
Well, yeah, I mean, and look, I mean, when you look at the numbers overall.
MOH. Just going to check MOH here. Molina Healthcare. I have traded that a few times. Actually, Molina Healthcare is getting a nice little bid. Oh, actually, no, it's flat. Sorry, I apologize. It's flat. We also have O'Reilly after the bell. We're waiting on that. ORLY. We are short O'Reilly, so we are in the money on our O'Reilly trade, so hopefully we can get some continued downside. Let's look at Hood again. Hood is actually catching a bounce, so after dipping, it is trying to rip now. Let's take a look back at Disney. Disney's still coming down. Affirm. Whoops. AFRM. Affirm is getting demolished. Clear demolish happening. Let's take a look at Sun Life, SLF. SLF, no movement yet. Spiders are actually down about 20 cents, 17 cents in the after hours. So again, it's showing that net, basically the market is down across the board on earnings. Now, it doesn't necessarily mean earnings plays have to be down, but it's just saying that money has flowed out of the indices in the after hours, probably due to some big cap techs taking profits as well. But Disney's important, as well as Molina, Affirm. That buy now, pay later is not a good idea. Apple just literally introduced their buy now, pay later, and look what's happening to Affirm. So I think it's really important to observe those key correlations. But Disney's off the... Let's just see where Disney actually closed at the high. So on the daily chart, you can see the high pivot was at this red. I'll draw that yellow line. The low pivot on the daily chart was at this line. And then in comparison to where we're trading now, you're just trading above that high pivot of the day. So really not that much of a big move. The implied range was 5%, so we haven't really got that. I mean, technically, if you took the high pivot here down to the low, look at that. The implied range is 5.29. Bloomberg's that good. Shout out to Bloomberg. But it really hasn't moved 5% from the closing price. Just want to touch base on BTC USDT. And then we have seen really weak price action in the crypto. It's finally taking a breather. There's potentially a sell signal on crypto that's occurring that we have to be mindful of. Because if it triggers, we could see a big move in crypto to the downside, which would be the next support around Bitcoin, 21,000, give or take. So there's lots to continue to monitor. Really, it's fairly quiet overall. Earnings, you know, there hasn't really been too crazy moves other than Affirm making a big move. Robinhood's trading up. Firm's still down. O'Reilly hasn't moved. The dollar's starting to creep back up, which could see more downside in some of these earnings plays. But nothing really crazy that we need to be aware of. Disney did get a fairly decent pop. But overall, it has come in. Basically still trading near the high of the high pivot. So it hasn't moved that crazy on us today. Affirm is really not getting any love. So one thing I want to touch base on is that when you start seeing these crappy bankrupt companies like Affirm go under, I'm not saying bankrupt, it hasn't gone bankrupt, but these companies that make virtually no cash, they just burn through a whole lot of cash. When you start seeing these stocks again potentially putting in their next downtrend high pivot, just like here we put in a high pivot, this is likely our high pivot, and the big question is, do we start taking out new lows? A lot of these companies that are basically bankrupt, the high speculation companies, high beta companies, they are the ones that often lead the rallies first and top first. So that's potentially what we could be seeing in the making. Disney's starting to push back up a little bit. Affirm is now dropping more. Wow, let me just do a little bit of a measured move calculate. Affirm's down 16%. Let me see if I can actually isolate a level on Affirm for us to trade. Just bear with me here for 2 seconds. There is a potential level I'm eyeing up, but I need to do a couple calculations here on Affirm. And this would just be, there's no way you're catching me holding this overnight. Win, lose, or draw, we would be out of this potential trade. Disney's pushing up. So I'll pull up Affirm when I have a level. I actually have 2 levels. Okay, so the level on Affirm, 2 levels that we can trade, is 1225 and 1171. But let me be clear, this is super high risk. Affirm is still falling. Still falling. So this is extremely high risk trade setup. But Affirm is continuing to fall. It's at 13.13. It's getting close to a potential day trade scalp level here. It's getting very close. It's now down over, wow. It's now down 18% in the after hours. Disney remains strong. I'm still watching a few other stocks. Robinhood has caught a nice pop. But Affirm is getting rocked in the after hours here. It's getting destroyed. This is the potential day trade. I want to see if I can see any buying pressure coming in as we head in there. So Affirm is coming down, still coming down. Just trying to see if I can see anything of importance. Spiders are still negative in the after hours. Disney's pushing up. Now this is super high risk, super high risk. It could easily slice through this level. But it's coming down. Still coming down. It's getting close to that level here. Affirm is still trading down about 19% in the after hours. I'll let you know if I take this trade. I'm just going to wait and see if I can see any little bits of buying pressure come in at this level, because I do not want to be left holding this bag. See, okay, so there are buyers coming in here. There are buyers coming in, so that tells us that we are a little bit more conservative on our level, which is actually what I want to see. But this after hours is super, super risky. Not for the faint of heart. This thing could easily rip through us. So it's coming back down now. But you are catching a little bit of a buy here. The level's still technically valid. But we don't want to see much more buying pressure than this, or else I'm going to have to take off this 12.25 level. Yeah, you see now that the fact that it's hovering there too long leaves me a little bit vulnerable. It's catching a bigger bounce. Likely means that it's still technically valid, but in about 30 seconds this first level won't be. I'll have to readjust, but you are getting a pretty decent bounce here. Look at that bounce already. That was the bounce we were looking for. We were just a little bit more, that's a 5% bounce. Like, that's what we were waiting for and trying to scalp, and we just went with a little bit more of a conservative level. But it's good to know that the analysis we do and the calculations we do was in line with where the markets actually bought this back up. Now, we were a little bit more on the conservative side. That's basically how I've done most of my math for trading. But at least we know that that was a close level. The trade's now off the table. It's had too much of a bounce. Basically, I would have to see it pierce this level now. This no longer buying on this 12.25. I would have to only buy at this 11.69. But it looks like the bounce is pretty much over. I wouldn't even consider it now. It's had its reaction. It likely means that this could be the low unless there's some horrific guidance. So we'll flip back to Disney. Disney's catching a little bit of a pop, drop, but basically going nowhere. You know, you're closing above the high pivot over here in the day, so it's slightly up in the after hours. Hood is pulled back. You're seeing a little bit of weakness in MOH, Molina, gapping down in the after hours, so closing a high pivot at 307, now down to 301, losing about $6 there. That's certainly negative. Let's take a look back at Disney again. Still trading. Let's take a look at Goodyear Tire, GT. GT is, I don't know where this closed today, so GT closed at 11.11, make a wish, and now it's at 11.10, so down about a penny in the after hours. O'Reilly hasn't moved. I'm curious to know about this stock, but it has not moved right now. Let's take a look at Vimeo. Vimeo also hasn't moved. Hood's really just seeing distribution. Disney's really the strong one. AFRM's trying to come back down again for round 2. So take a look at this. Now, you did technically put in a 5-minute bottoming tail, so if you were to come down and pierce that level, you could buy it having a very close, tight stop loss on the 5-minute mark and basically stopping out if you close on the 5-minute chart below this pivot, this wick low. But what this tells you is that there were buyers there. You could get a retrace. That would be a potential buying opportunity, but just have your stop loss very close to this wick. You know, basically within the 5-minute candle, you can stop out for a loss if it was to close below that wick. Really, I'm going to sum the stream up from here because it looks like we've got the biggest movements out of the markets. Obviously, there's still forward guidance from Disney that could move this stock, but I highly doubt that we're going to see a big reaction either way. Net for Disney, the markets, it's positive. The markets actually are up 4% in the post-market hours, so it's showing that the earnings have actually lifted the markets in the hours. We're definitely going to have day trade setups tomorrow. We're still waiting for a few earnings to come in, but with the likes of AFRM, Affirm, I will do some additional calculations over tonight. I'll do some levels on Disney. We will likely see a momentum push in the Disney. Tomorrow, if the markets are weak, we could fade that. If the markets are strong in the morning, we could potentially hop on for that long momentum play. So we're going to have to wait and see, but I'm going to encourage you to tune in for the live stream in the morning because we will have trade setups We closed 2 for 2 today. With the third one, we're in the money with the daily close. So wonderful, wonderful job if you've been trading with us. We hope to continue to making profits with you. Stay tuned for a daily analysis report. I'm going to be touching on some important things that every market participant needs to know. This not only affects one sector, this affects the whole market. I think it's crucial what I'm going to touch base on because it's going to give us additional insights into where this market is likely going to head. On that note, I'm going to bid you farewell. We'll see you on the charts tomorrow and tune in for our live stream. Take care, everybody. 8:30 a.m. payrolls, initial job loss claims. Watch those yields, watch that dollar. If that report comes in better than expected, yields are going to spike. If it comes in worse, you could see a softening in yields. But either way, we should have continued volatility along with a whole host of other earnings plays. Take care, everybody, and we'll see you on the charts below. Please subscribe and like this channel. Take care.